The Australian Securities and Investments Commission chairman is warning consumers to approach crypto investment with great caution. Let's go to Scott Phillips, the Chief Investment Officer at the Motley. Scott, good morning to you. So what's behind this?
Pete, good morning. It's on the back, of course, of the RBA statement last week on similar concerns that maybe people aren't necessarily as informed as they might be, or they're using cryptos as an investment product that maybe it's not suitable for. Now, of course, we know that Senator Jane Hume is on the other side of that conversation over the last couple of days as well. It's just an interesting move by both regulators, just to remind us to just cool our jets a little bit. It can possibly be an investment opportunity for those who know what they're doing, who know how it forms part of their portfolio. But more broadly, just be a little bit careful because there's downsides as well as the seemingly inevitable rise of Bitcoin over the last 12 or 24 months.
You open to it, Scott?
I own $100 worth of Bitcoin I bought back in the day just to follow along. Yeah, I'm open to it, yes. I'm absolutely not in the place of saying it's time to buy necessarily. The RBA makes a very cogent argument on the downside risks. And again, I'm not saying they're going to be right, but we don't know. It's very, very hard to work out what we're going to be using in 3, 5, 6, 10 years. Is it Bitcoin? Is it Ethereum? Is it something entirely different or nothing at all? You can't know. And so on that basis, it's very hard to make it an investment product. From that perspective, it's probably speculation, maybe even intelligent speculation, but hard to call it investable at the moment.
Okay, the US president keeping the Federal Reserve boss on for a second term, Scott.
Markets like that, Jerome Powell getting a second 4-year term from Joe Biden. There was some interest in possibly a change at the top, but I think at the moment, given everything we've been through over the past couple of years, the markets in particular were looking for a steadier hand at the tiller. Obviously, President Biden and Chairman Powell have found a way to agree on, or at least conceptually agree on what the future might look like, the way they're going to approach monetary policy in the US, while the president's, of course, managing the fiscal policy with Congress. It's a challenging role for both of them, particularly as they try and work out what the future looks like. The big bipartisan stimulus bill being signed there relatively recently, that's going to be good for the economy more broadly. And apparently, according to major economists, not going to be inflationary. That probably does calm Jerome Powell a little bit because that's still the watching brief, with inflation there being 6.2% on the most recent read.
Okay, what about this story, Scott, that we are using less cash these days, and I suppose that's driven somewhat by the pandemic, but there appears to be more of it around. So how does that work?
It's a fascinating stat, isn't it? If you look at the long-term numbers out from the RBA, we've been using less and less cash, not only over the last 18, 24 months, Pete, but over the past 5 and 10 years. There was a slow and steady decline of cash, while the use of debit cards and credit cards and probably buy now, pay later more recently start to pick up and really take the lion's share of transactions. Of course, just because it's not circulating through the economy doesn't mean it's not out there. And apparently the bank says there's 20% more cash now in circulation compared to a year ago. 95% of that, by the way, is in 50s and 100s. So someone's got a bit of cash under the mattress probably, and I think that's largely what drove it. People saying, well, look, I've got some cash. I'll keep it on the, just in case. Keep it in the bottom drawer, keep it under the mattress. Hopefully keep it in the safe. You've got a lot of it. But making sure that, the money is there if it's needed, if the worst came to worst. Maybe a bit of a doomsday kind of scenario, but really fascinating numbers, as you say, that despite the fact we're using less of it in transactions, there's more of it actually in the back pockets, the mattresses, the purses, maybe the bottom drawers around the country.
Or buried in the ground too, Scott, as some prefer?
Possibly, if that's your thing. I'm not sure. I'd be a little bit worried I forget where I put it, mate. But I guess if it's clear enough and you've got it marked somewhere, you wouldn't bury it next to a tree and come back a couple of years later and find there's 5 or 10 trees around and trying to work out where to get it.
Yeah, those older notes collecting all kind of olden. All that too. Hey, just quickly, supply chain challenges that could be around until after Christmas.
Yeah, boss of DHL, echoing something Paul Zara, the head of the Retailers Association, said only 48 hours ago. Not only till after Christmas, mate, but basically as late as 2023, both gentlemen are saying. So we desperately hope that's not the case. It just goes to show when you gum up the works of the global supply chain, it's such a well-oiled machine. We're so used to everything just working like clockwork. Once it stops, trying to get it restarted is really, really tough. And there's, ports around the world, not only around the country, around the world, just absolutely backed up, mate. Containers everywhere. And people trying to find a way to get through the backlog and try and clear it. It could take up to 12 months, maybe even a little bit more, according to some of those people who really should know.
Okay. Scott Phillips, appreciate it. Thank you. We'll talk to you soon.